Hi, hello everybody. Thank you for joining us today. My name is Courtney Egan from Oxford Economics, and to start by welcoming all of you for our webinar on African cities, the next frontier for urbanization and resulting corporate opportunities. For those of you who are new to Oxford Economics, just as a brief introduction, we were founded in 1981 as a commercial venture with Oxford University and are now one of the leading independent global forecasting advisory firms, providing analytical tools, forecasts, and reports for 200 countries, 100 industries, and 3,000 cities. What we're looking at today is part of our African City Service that was launched last year, and so this is 1 year on, and we're taking a look at how the data and the outlooks for Africa's opportunity cities have changed. Before we get started, just a few housekeeping points. Graeme Harrison, our Associate Director looking at emerging and developing markets, is going to provide about a 20-minute presentation, and then we're going to take some questions. If you'd like to ask a question, there should be a drop-down box at the top of your screen. Please just use the chat icon that's in the box, and you can send a private message to the host, Adrian. This can be done throughout the presentation. Also, if everyone can remember to remain on mute so we don't have any background noise, that would be excellent. Thank you. So that's all for me. Now I'm going to pass it over to Graeme.
Hi, everyone. As Courtney has said, the title of this presentation is African Cities, the Next Frontier for Urbanization and the Resultant Corporate Opportunities. The reason I've gone for that title is that, as I will show, Africa is the least urbanized of any world region. So as Africa generally is forecast to grow strongly, but particularly its urban areas, as its national economies grow fast, as it urbanizes faster than anywhere else in the world. The urbanization opportunity from Africa is significant. And what I want to get across in this presentation is what that means for corporate opportunities. So the main focus of the presentation today is really just to introduce the service for those who are new to our African City Service and to pull out some of the key messages and predictions from the service. And just at the end, I include Courtney's contact details should you want to get in touch. So by way of introduction, as many of you will know, there's a huge interest in African economies, both from within and outside the continent. So we've had the Asian growth miracle of the last 2-3 decades, and now Africa is seen as the next and probably the final frontier for growth across the global economy. Not only that, it's also really the last world region to truly urbanize. So the economic opportunities within Africa, and particularly at city level, are significant. But it's rare actually to have these business opportunities quantified below national level, even in Africa's biggest cities like Lagos, Cairo, Luanda, or Nairobi. I mean, there are issues with African data, but there's much more available than people are actually aware of. But it's very rare that you see economic analysis or economic forecasts at city level in Africa as we have in our African City Service. So what that has meant is that investment, market, and location decisions have often been made in Africa without the same intelligence elsewhere in the world. And what it probably means as well is some investments have probably been foregone because of a lack of this intelligence. Another reason why this African City Service is so important beyond the strength of Africa's urban economies is the difference between national and city economic data in Africa. More than any world region, there's a bigger difference between national and city data. And what I mean, if you think of measures like GDP per head or the proportion of high-income households, those differentials between national and city are much greater in Africa than anywhere else. And what that means then is national data, which most organizations have to rely on in Africa, is actually a poor reflection of urban economic prosperity. And the reason for that is because of Africa's under-urbanization. Africa's rural economy accounts disproportionately in national data, and rural economies tend to be very low productivity. So African cities are today and will be in future a source of a disproportionate concentration of growth in middle to high income households, and they'll also be the location of activities that will power Africa's structural transformation as it moves away from its overdependence on processed commodities. And really we feel that our African City Service can help businesses to navigate what these great opportunities can mean across the region. So as Courtney has said, this is the second year of our African City Service. It was launched before Christmas of last year. It is an offshoot of Oxford Economics' one-off Global Cities project, but it's now part of our mainstream portfolio of cities and regions forecast services. The country coverage is very wide. It covers 49 countries and 102 cities. So these are Africa's largest 102 cities by population, and also it includes some more strategically important capitals. Just to understand the structure of Oxford models, our cities model sits as part of our suite of Oxford's global macro and industry forecast models. So what that means is that developments in the global economy at global industry level feed through to our outlooks for African economies. So that could be oil prices, exchange rates, demand for China, investment from China. All of those global linkages between Africa and the world economy are factored into our city forecast through the linkage of the city models to our national macro and industry models. The variable coverage of the city service is very deep and very wide. I've picked out here 4 main modular blocks of variables. So we cover demographics in detail, including total population and broad year age bands, as well as 5-year age bands. At the industry level, we cover employment and GDP by 6 broad sectors. It's also generally this service, it's very much a consumer and income type of service. We have a lot of detail on household income and on consumer spending. So at the household income level, we have total household income, the average per household, and the number of households by 12 different income bands. And these 12 income bands can then be aggregated to whatever definition you apply for high, medium, and low income households. At the consumer spending level, we have total consumer spending, and then we use the UN's COICOP classification system to break down consumer spending into over 40 spending categories. And then we also produce an aggregate of location-based retail sales, which is really an aggregation of those retail-focused consumer categories. Now, all of these variables I've mentioned are available for each city and each of the countries covered. They're also available in local currency terms and in US dollar terms and in the same base year. So what that means is you can compare any country or city across Africa, and because this is was originally part of our Global Cities project, if you're a subscriber to different other regional services, you can compare African cities to any other major city across the world. In our data bank where the data is stored, the historic annual series goes back to 2000 with annual forecast to 2030. So you get to look at sort of the historic trends for a city and also our outlook to 2030. And by the fact that the outlooks are annual, it means you can look at short, medium, and long-term prospects. Now, onto the key messages section of the webinar. This is really just a couple of key structural messages in the data and some of the key changes from last year. So just to emphasize the point about Africa's urbanization and the great opportunity that that brings, you can see in the first chart on the left, Africa is the least urbanized region of any part of the world. But then if you look across African countries, there's a great range from Ethiopia to South Africa, which is the most urbanized and the sort of the highest income economy within, on a per capita basis, within Africa. So there's huge scope for Africa to urbanize, to increase its urban share of the population, and you can see other countries like Ethiopia, Kenya are expected to follow the path of more urbanized countries shown in the chart on the right. Even today, the economic footprint of Africa's cities is sizable. So of the 102 cities, they account for almost 200 million of the continent's population and almost 1 trillion of GDP. They account for $500 billion US in consumer spending and are home to 17 million middle-income households. And while these cities only account for 18% of the African continent's population, they account for 80% of the continent's high-income households. So you can see that there's a real concentration of economic wealth in these cities. And one of the big developments since we last updated this service has been some rebasing of national accounts across some of Africa's most important economies. So what this means is countries have looked at how they measure different sectors of the economy. They've also changed the base year for national accounts, and what that means is certain sectors now get a larger weight in the GDP. And what this has done, you can see in the chart on the left, is Nigeria has jumped from being previously Africa's second largest economy to now its largest. In fact, Nigeria's GDP has been revised up by 70%. Now that has important implications for the African Cities Service because it has meant a revision in Nigerian cities' GDP and in the rank order of African cities by economic size. A couple of other countries with notable revisions were Kenya. And, some African countries have rebased and revised their national accounts, but many more are still to follow. It's very important when you're thinking of the economic prosperity of African cities is whether they have or have not rebased their GDP recently. Just to demonstrate the impact of that rebasing at the city level, previously in 2013 we had Lagos as Africa's 7th largest urban economy. Now with the new national data for Nigeria, it's jumped from 7th to 3rd. Some other economies have changed there to include in the other Nigerian cities such as Ibadan. Another structural feature of our African Cities Service and indeed our Global Cities Service is a link between income per head and consumer spending patterns. So what we have found is as cities and countries get richer, their share of expenditure on food and non-alcoholic beverages falls. If you can think of these as necessity goods or non-discretionary. And as income rises, the share of expenditure on non-discretionary consumer items rises, and the example here I've given is recreational, cultural services. Now these trends and structural relationships are built into our forecast method for consumer spending in terms of the income elasticities that we apply. Now this doesn't mean as a city gets richer it spends less in absolute terms on food and non-alcohol. It just means the share of expenditure changes and the growth in spending in other areas grows faster. Now, we cover cities in the African Cities Service across a very broad spectrum of income levels. And here I've picked out sort of Africa's 2 mega cities, Lagos and Johannesburg. And because Johannesburg is a much richer, more advanced city, you can see it has a much different consumer spending pattern. So the residents of Johannesburg spend a much lower proportion of overall spending on food and non-alcohol, and a much higher proportion on items such as transport services and vehicle purchases, housing or other goods and services, which would include sort of personal care and financial services. But what this does reveal is you would expect as Lagos gets richer that it would start to have a consumer spending pattern more similar to Johannesburg. Now I've picked out 13 key predictions from the service. Now some of these structural predictions are the same as what we would have predicted before, but some have changed with changes in the global economy, the changes in the macro outlook for these economies, and just some of the new data. So the first headline prediction is the significant growing economic footprint of African cities. So by 2030, these 102 cities will have 110 million more people live in them, according to our forecast. Their GDP will more than double, as will the incomes and consumer spending of these cities. The annual average GDP growth over the next 2 decades will be greater than 5%, again highlighting the economic growth potential of these cities. There will be 21 million more middle-income households, and the annual growth in high-income households will be a particularly strong 7%. As I said earlier, with the rebasing of the national GDP in Nigeria, Lagos is now the 4th largest city in Africa in GDP terms, but by 2030 we predict it will be the largest African urban economy. And compared to our previous forecast, we only had Lagos reaching the rank of 4th. So it's quite a significant change from 1 year ago, where Lagos will now be the largest economy in GDP terms, as opposed to our previous prediction of 4th. And what that has done is it's dropped Johannesburg down 2 places. So Johannesburg will only be the 3rd largest urban economy in Africa in 2030. In population terms, we're predicting huge population growth in Lagos and Kinshasa. What that will mean is these 2 cities will join the world's largest 20 cities in populations by 2030. That's a significant finding. 2 of these cities will be amongst the world's largest 20. Given the economic growth outlooks across the different countries and cities, we do find that South African cities, which currently occupy sort of amongst the top places in the GDP ranks, they will fall down the ranks by 2030. I mean, other notable movers up the ranks will be Dar es Salaam in Tanzania will move up from 15th place today to 10th. We have a couple of other Nigerian cities and Huambo in Angola. And as I said before, Lagos will move up to its top rank in 2030. But we think it's important to not just look at GDP. I mean, GDP can be affected by a host of factors, and particularly for consumer firms, we would encourage that you look across a range of our metrics. So what we tried to do in this table is identify Africa's top 20 opportunity cities in 2030. And the key prediction there is that Johannesburg will stay top. And this is because when you look across a range of metrics, whether that be financial and business services jobs, which is important for the real estate sector, the sort of the wealth of the purchasing power of households by looking at the number of middle and high income households, and you vary the weights across these categories, it does paint the rankings in a different light. So here you have Johannesburg top as Africa's opportunity city. It's closely followed by Cairo and Lagos. Now, looking across the different regions of Africa, this chart presents the average urban GDP growth between now and 2030. And what you see are the fastest growing sub-regions are expected to be West Africa, East Africa and Central Africa, and the more mature economies of Southern Africa and North Africa are forecast to have weaker urban GDP growth. While our service covers Africa's 102 largest cities, there are actually 10 big cities which will account for half of Africa's urban GDP expansion to 2030, and these are listed here in the pie chart to the right. So the really big cities that matter most for at the African continent and Africa's cities are Lagos, Luanda, Cairo, Johannesburg, Dar es Salaam, Algiers, Alexandria, Tripoli, Cape Town and Lusaka. So while you can look at all 102 cities, if you want to focus on some key markets, on GDP growth alone, in terms of the absolute expansion, these would be the cities to focus on. Now, one thing we're able to do because of this African city service sitting within a wider portfolio of global cities, we're able to look at the very important issue of industrialization across African cities and how that compares across the world. Now, this map shows the red circles indicate where we forecast growth in industry employment, and the blue circles are where we forecast a decline. So you can see in Europe and in some of the more expensive parts of Northeast Asia, in Japan and South Korea, we predict a decline in industrial employment. Think of that really as the manufacturing jobs being relocated to lower cost locations. The size of the circle then represents the scale of the absolute change forecast. So you can see huge industrial expansion forecast still for China, still for bits of Southeast Asia in Indonesia, Vietnam, and huge growth in India. Now, there are pockets of notable industrial expansion within Africa across some of the major cities, but compared to Asia, it's not even close on a scale on that, despite Africa having the lowest wage cost of any region. And I picked this up because this is a very important point in relation to the pace at which African cities will grow in terms of the contribution that will come from productivity growth and just the extent to which GDP per head can quickly change and catch up. This next chart then splits African urban GDP growth into the growth accounted for by employment, which is partly driven by demographics, and that which is accounted for by productivity. It's the navy bar. And you can see compared to urban economies like Shanghai or even in Seoul or Hong Kong, there's a much greater contribution to growth in those cities from productivity compared to African cities. African cities are much more dependent on employment growth. And in practice what this means is, given the very strong demographics of African cities, there's lots of growth in the informal service sector, which is of low productivity, and this is preventing African cities from growing stronger in GDP terms and preventing the productivity contribution from being higher. In terms of our outlook for household income, Lagos is predicted to have the most middle income households in 2030, overtaking Cairo, which has the most today. In terms of high-income households, Johannesburg has the most today and is still predicted to stay ahead in the ranks by 2030. But you can see here Cairo and Luanda start to catch up fast with Johannesburg. And what this really reflects is not only the GDP growth of these two cities, but also there's a large group of middle income households in these cities who will make the transition to high income over the next 2 decades. As I said, the service covers consumer spending categories in a lot of detail, and here I just wanted to pick out where the top 5 consumer markets will be across a selection of categories. So Lagos will be the largest consumer market in Africa for non-alcoholic beverages, and Johannesburg will be the largest for a number of other categories such as housing, eating out, vehicle purchases, personal care, and recreation and cultural services. But what you can see here is the rankings change for different categories, reflecting the different consumer spending patterns across those cities, as well as their different levels of wealth and overall aggregate size. I think it's also useful to place African cities in a global context, and what this table does next is the first block of data looks at where these 5 African cities rank across a range of metrics, and the second block looks at how their ranks change from today. So the cells highlighted in pink indicate where African cities rank in the world's top 100, and you can see that they feature prominently in the top 100 for a range of metrics. So you have Lagos will be the 9th largest city in 2030 in population terms, and will be the 87th largest urban economy. Johannesburg then will be 68th largest for its level of consumer spending, and Cairo will be 14th globally for its number of middle-income households. So these are very high ranks for some of these cities, even in a global perspective. And the other key point to note from this table is the extent to which African cities are climbing up the global ranks. So Luanda will climb 96 places in population, and it'll climb 116 places in middle-income households. So they will feature prominently amongst the world's most important cities, and they're climbing up in importance very quickly. Just now to place these African cities in the context of some other cities. So I said Lagos will be the 9th largest city in 2030. That will place it in between Delhi and Mexico City. So it gives you a sense of the scale of Lagos in 2030. Johannesburg's economy will be as large as Athens or Brasilia. Cape Town will have as many financial and business services jobs as Birmingham in the UK or Nagoya in Japan. Lagos will have as many middle-income households as Bangkok or Guangzhou, one of China's megacities, and Cairo will have as much consumer spending as Sacramento in the US or Tel Aviv in Israel. Just also to say, throughout the year, we will be keeping subscribers and other individuals' interest in some key topical issues across the African economy, both at a macro and at an urban level. So in November, we produced a research briefing here you can see on the economic impact of Ebola on Africa and globally, and our intention over the next few months is to present a short research brief on the outlooks for African cities, also a brief on the impact of rebasing, and also probably a brief on the impact of global commodity price developments on prospects for African economies, including at city level. So the final slide here just lists Courtney's contact details if you would like to get in touch, and I'm happy to field if there are any questions being posted. I'm happy to answer those now.
Thank you very much, Graeme. Yeah, so we did have a couple of questions that have come in. So first off, and I think it's a quite topical question that has been on everybody's minds recently. So what has been the impact of Ebola on the directly affected countries and the continent as a whole?
Yeah, so at the time of updating this service, Ebola was very much in our minds and in the minds of anyone interested in Africa generally. So the main impact has been the 3 affected economies. I think the authorities have managed to contain Ebola from spreading outside these 3 countries, which has meant that, as I said, the impact has largely been felt on the 3 directly affected countries. If you look at their short-term outlook, it's been significantly downgraded compared to our predictions last year. Now, at the continent level, you don't see a huge impact from Ebola, and that's really because Ebola didn't spread to some of the neighbouring, much larger economies. Had Ebola spread to Nigeria are countries like Ivory Coast or Ghana, which are significant commodity producers, you would have seen larger effects at the continent and at the global level. But because of its containment to the three countries, the impact has been relatively small outside.
Okay, thank you. Another one that's come in. What effect has the rapid decline of oil prices had on your forecast, as most of the rapid growth economies are oil-based?
Yeah, now what I should say that this service was updated just prior to some of these significant developments in commodity markets, which have had spillover effects to exchange rates also. Now, what I do know from our macro service is we have downgraded the short-term growth prospects for Africa's major commodity producers, particularly oil. So if you were to look at our outlook for Nigeria, for Angola, you'll see a much weaker short-term outlook compared to just a few months ago. Now, given our view on long-term oil prices, this shouldn't really affect where economies will reach by 2030, but certainly in 2015, you can see weaker growth in our outlook for Nigeria and for Angola and other countries, and that obviously will have spillover effects to the cities.
Okay, and I guess a more of a kind of basic question is, how important is it when a country has last rebased its GDP?
Well, I think you can see from the Nigeria example, it's crucial. How you view a country like Nigeria could significantly change if now you discover its GDP or its GDP per head is 70% higher. So it's crucial, just given that that's the potential scale of change. What has happened is many activities like financial services, telecommunications, even in Nigeria, the sort of film sector, their economic value was significantly under-recorded. Now, many of those sectors that were under-recorded tend to be urban sectors. So while the revisions are significant at national level, they're even more significant at an urban level.
And we had another one that's come in asking, are there any trends regarding the importance of the informal sector as part of the economic system of African cities? Is it declining or rising?
Yeah, now insofar as the national data captures the informal economy, which is the case for most countries, our numbers do capture the informal sector. I think the point I made on Africa's lack of progress in industrialization is important here, as is the sort of rapid demographic growth in these cities. So what I said is, because of the failure of these cities to create lots of industrial jobs, unlike sort of China and parts of Asia has done, you see rapid growth in some of the service sector employment in these cities, but it tends to be a very low productivity, and this will capture lots of informal sort of petty street trade. So yes, the trend had African cities industrialized more strongly would have been declining, but because of the nature of their growth, because of the rapid influx of migration and strong natural increase, the informal economy remains a very important part of these cities.
Okay, well, thank you very much, Graeme. I think that wraps it up for the questions. So I would like to say thank you all very much for attending. If any of you would like any further information, please, you have my contact details here, or if you have any further questions that you didn't get a chance to ask Graeme during the webinar, please feel free to send them over. The recordings, for your reference, the recordings and the slides will be sent out later today for all those who have registered. So I'd like to say, again, thanks for attending, and have a good day, everyone. Thank you.